Najlepše hvala gospodinu Gilu. Na kraju današnjeg plenarnog dela programa obratit će nam se gospodin Donald McGettigan, šef misije Međunarodnog monetarnog fonda za Srbiju. Krajem prošle godine potpisan je novi trogodišnji stand-by aranžman sa fondom. Postavljeni su ključni ciljevi koji se odnose na nastavak strukturnih reformi i realizaciju makroekonomske politike. Juče i danas imali smo prilike da čujemo pohvalne, ali i kritičke stavove o makroekonomskom stanju u Srbiji i stoga će biti zanimljivo da saslušamo šta o dosadašnjim reformama, ali i o planovima misli Međunarodni monetarni fond. Gospodine McGettigan, izvolite.
Hello everyone. Dear colleagues, Madam Governor, it's a real pleasure to be here at Kaponik. I'd really like to thank the organizers, in particular Mr. Vlahovic, the president of the Serbian Association of Economists, for inviting me to be here and present the IMF views. Today, what I'd like to do is to discuss Serbia's economic resilience and how the latest IMF supported program helps in this regard. It may be quite unusual, but I expect to take a much more optimistic take than the World Bank on this, but maybe a reversal of roles is okay now and again. So, starting off, I want to put the latest standby in context. IMF and Serbia have had a long history of close and productive relations. This goes right back to 2000, when the Serbian economy was in really difficult circumstances. It was a post-conflict situation. We started with a post-conflict program that focused on the basics: macro stabilization, getting the banking sector together, getting basic fiscal and monetary policy frameworks in place. This was then followed by further stabilization programs in 2001 and 2002. And then we saw the global financial crisis in 2009, 2011, where Serbia and many other countries had to react to the crisis. And again, the IMF and Serbia worked together to address the crisis situation. Moving a bit nearer to today, 2015 saw one of the most successful programs, both in Serbia and in the entire region. This is a program, again, focused on securing macro stability. It was also focused on very difficult reforms: deep fiscal adjustment, difficult fiscal adjustment, wage cuts, pension cuts. And although these were very difficult and they had costs at the time, they paved the way for Serbia's success in subsequent years. Following this successful program, we had two what are called PCIs. They're non-financial arrangements. These were basically a good way to foster discussions between the IMF and Serbia. And when the COVID pandemic hit, the fact that these were in place was a very good forum for discussions, collaborative discussions between the two sides, how to react and how to preserve macro stability. Serbia, it's fair to say, had a very shallow growth cost from the pandemic, and it has recovered very strongly. But no sooner had the pandemic started to wane than we were hit by the global energy shock, and we were hit by domestic energy production problems, severe domestic energy production problems. And this led to large fiscal and external financing needs, which are addressed with the latest program that was agreed in December. Now, what I want to do first, before going on to the program itself, the latest program, is to see how all this good, productive relationship between the fund and Serbia has led to a variety of success indicators. Madam Governor has gone through all these in a lot more detail, a lot more comprehensively than I will do here, but I want to give a sense of just how successful some of this collaboration has been and the strong results that have resulted from this. I don't want to downplay challenges. There are deep structural challenges. Some of these are addressed by the current program, including in the energy sector, including in the SOE sector, including in fiscal transparency. Others are not addressed, but we know what these are. But I do want to focus on Serbia's very impressive success in many ways. And the first way in which I'd like to show here is real GDP per capita in euros. This is a critical indicator. Growth matters, GDP matters. It has an impact on people's lives and quality of lives. And we can see here, going right back to 2013, that at the start of the period, and as Serbia was involved in deep reforms and fiscal adjustment, this had a temporary cost in terms of growth, but it was well worth the cost in that it paved the way for subsequent, much stronger growth. And we see at the end of the period in euro terms that Serbia is actually ahead, not only of the euro area, where it's well ahead in terms of growth over this period, but the emerging and developing Europe peers as well. So this is an impressive growth over just 9 years of 40%, and we hope that this continues. Next, strong growth fed into a strong labor market. All these key indicators go in the right direction. Participation rate goes from just above 60% to much higher than this over the period. Unemployment has fallen to a record low, as Madam Governor has mentioned. Youth unemployment has fallen even more sharply, and the employment rate has gone up very sharply as well. So again, all good, strong indicators. And it's not just a richer society with a stronger labor market, but this feeds through to poverty. GDP per capita has gone up, but a measure reported severe material deprivation has halved over a period of from 2014 to 2021, which is a very impressive record. Turning now to reflecting all this strong growth and strong progress, Serbia is a leader. It's a leader in the region in FDI. Its receipts of FDI since 2013 have averaged around 5.5%. It's even stronger than this in recent years. It covers or more than covers the current account deficit. FDI is also critically important in that it helps foster knowledge, it fosters employment, it fosters exports. And this FDI in Serbia is also very diversified in terms of the countries it comes from, and very diversified in terms of the sectors it goes into. So coming from Ireland, where FDI has played a big role, I think I'm a real fan of FDI. I think it plays a very positive role, and it's good to see how far ahead of peers Serbia is in this regard. Which takes us to fiscal. 2 points I want to make here. First of all is to reiterate just how impressive the fiscal adjustment was in the 2015 program and subsequently, in that we had a very big move from a large deficit to actually a few years of surplus, which means that when the pandemic hit, Serbia had the buffers and the space to respond properly using its fiscal support. And when it had done that, in the wake of the pandemic, it's starting to go back to tighter fiscal policy again, which is something we would recommend for a variety of reasons, including to rebuild buffers for the next shock. At the same time, despite this impressive overall balance, public investment has increased from a relatively low base to a much higher base over time. And this is much needed in Serbia, and this is a good form of expenditure and better than many other forms of expenditure. At the same time, debt has come down. I know debt was lower in the past, and this was mentioned by Mr. Vlahovic earlier, but I'm looking at the last few years, and debt has come down since 2016 to 2022. Not only that, the quality and structure of the debt has improved. Look at the gray bar in 2016, long-term debt. It's quite small. And the two blue bars are quite big. This is now reversed. Much more of the debt is now longer term, more resilient. And this is a very impressive achievement by Serbia's debt managers. At the same time, gross reserves, I think reserves are fundamentally important. Reserves are critical for instilling confidence. They're critical for providing stability against crises. And Serbia has done a very good job in rebuilding these reserves over the past few years. We've two ways of looking at this. As Madam Governor has said, the reserves are now at a record high, and they're above 20 billion. We also have a reserve adequacy metric in the IMF that looks at a variety of factors and a variety of potential drains on reserves. And it recommends that reserves be between 100 and 150% of this index. Serbia, as you can see from the yellow line, has gone from near the bottom of this range to near the top of this range. It's an impressive achievement. Onto the banking sector, everything looks green of late. We can see NPLs have come down sharply, as Mr. Vlahovic mentioned earlier. We can see that returns have gone up, and we can see that regulatory capital has also gone up. So again, no obvious signs of stress here and many signs of strength. And reflecting all these positive developments, the main rating agencies have recognized Serbia's achievement. And now we see how over the past 8 years or so, that Serbia has moved across all three main rating agencies to just one notch below investment grade. Now, this is all very positive, but there have been recent shocks that have really tested Serbia's resilience. And just a summary of these shocks, you can see here that the yellow and red bars are the war in Ukraine and pandemics. These global uncertainty drivers have had a major impact on Serbia, like other peer countries, and that's a real challenge to deal with. It adds to fiscal pressures, it adds to external financing pressures, and overall, the energy prices have really increased, and at just the wrong time, Serbia's production of energy went down, which led to a real problem in terms of external and fiscal financing. Another way of getting across all the challenges are a variety of headlines. We can see that gas prices hit record high. This is one of the headlines, 10 times higher than pre-war levels. Emerging market fund managers face worsening outflows, again affecting countries such as Serbia and its peers. Gloomy growth outlook, as Indermit Gill has pointed out. That is hitting Serbia and its peers. A drought in Europe, a drought in Serbia, again, a really severe challenge. And of course, inflation, a really pernicious challenge that Serbia and many other peers face. So it's against this backdrop that we have a new standby arrangement with Serbia. Now, clearly the idea is to address external financing needs, fiscal financing needs, and to address the energy sector, where the key problems arose in the first place. And there's serious problems in the energy sector. There's also serious problems across the SOE sector as a whole, and they need to be addressed also. And we address this to an extent in the program. And there's also other challenges that we don't address, but that were mentioned earlier, including on education and other areas. But here we just focus on some of the key problems that IMF need to look at in a streamlined manner in its program. First of all, a very brief description of the program. It's a 2-year program, €2.5 billion front-loaded. It's given out in semi-annual disbursements. The idea is to turn the program precautionary in 2024. The focus is on energy, where there's real problems. And as I mentioned, the program is for external and budget needs. There's a lot of focus on energy, cost recovery. Tariffs are going up. They need to continue going up. And this is needed not just to help the energy companies, but it's needed to help preserve energy, help energy conservation, and to limit fiscal costs, which is another objective. At the same time, there's a need to protect the most vulnerable. Serbia was one of the first countries in the region with block pricing, which helps here. And there's also allocations in the budget, despite the budget being tight, to help the most vulnerable population. Of course, there's a need for investment in the energy sector. There's a need for a fundamental shift in management and governance of the energy SOEs. These need to fundamentally change. And it's very welcome that the Norwegians are working with the authorities, the World Bank, the EBRD. It's very helpful. And then, of course, is the National Energy and Climate Plan, which is also important. High tariffs are a core part of the program. They've already been increased. They need to increase further. Now is not the time to cut back on further increases. And there's a number of reasons for this. Global energy prices are uncertain, but also Serbia gas and electricity prices are low, even after the increases. We can see that in these charts, on the left-hand side, gas prices, right-hand side, electricity prices, that the bars in Serbia are generally lower than peers, much lower than some peers, and that the gap between the bars, in other words, the increase in 2022 in the first half, didn't happen. And there's a need for, this has happened in late 22, it has happened in early 23. Even with these increases, Serbia energy prices are well lower than peers and competitors, so further increases are not a competitiveness concern, and they're a core part of the program. But there's also what we call structural benchmarks in the program. I mentioned that gas tariff increases. We need to convert EPS to a joint stock company, and there also is a need for a restructuring plan. I won't go into the details, but EPS needs to be changed. Its management needs to be changed. Its independence needs to be changed. It needs to change in fundamental ways to prevent any recurrence of the problems that we saw in 2022 as a result of inadequate investment and badly managed company. The energy sector investment plan is therefore absolutely critical, and this needs to be properly costed and properly prioritized. And then I mentioned not just energy companies, but other SOEs also. There's problems. And there's a new SOE law being introduced right at the moment. It's been done in coordination with the fund, the bank, the EBRD. We have technical assistance experts here. We're working very closely with the authorities. This is an incredibly important law to be able to increase the independence and professionalism of SOEs across the board. So this is a very important benchmark. And now turning to the fund's bread and butter, macro policies. Tight monetary policy. Inflation is high. Much of this is caused by food and energy, but a lot of it's core. Core inflation is increasing, and the inflation rate is well above targets, both in Serbia and many other countries. As a result, Serbia has raised its interest rates, but real rates still remain negative, and therefore real rates, in our view, further rate hikes are likely needed, both in response to the ECB, which is expected to hike rates, and to get Serbia ex-ante real rates up to positive territory. Of course, this can happen through rate hikes or inflation expectations coming down, or a combination of both. And then disciplined fiscal policy. In 2022, despite the major spending on energy, the fiscal impulse in Serbia was negative. In other words, it helped in the inflation fight by restraining aggregate demand. It's very important in Serbia that monetary and fiscal policy work closely together to work on inflation. And what I mean by working together is restraining aggregate demand and being tight. And not only in 2022, we also expect that this year, under the planned budget, that the fiscal impulse will once again be negative. At the same time, capital spending remains strong and high. The program also has an important fiscal rule. The idea here is to limit fiscal deficits, and with deficit limits that depend on the debt level itself. The higher the debt level, the lower the deficit limit. There's also two expenditure rules within this fiscal rule. There's a wage bill ceiling, and there's a pension adjustment formula. The higher the pension bill, then the pension adjustment changes, a bit like the Swiss formula. The pension can go up either with prices, or prices and wages, or wages, depending on the level of the pension. There's, of course, escape clauses, correction mechanisms in common with all these fiscal rules. This rule is not in place now. It would not make any sense to have this in place now, given the severe challenges. But this has been passed in last year's budget. It's been legislated, and it's expected to come in 2025. And this is a very important addition to the already impressive fiscal track record in Serbia. We also have a number of other structural benchmarks. One is an employment and wage registry for the education sector. It's important to know what's going on and for the government to know exactly who's earning what and why, so that wage reform can go ahead successfully. Medium-term budgeting is also critical. Annual budgeting is all well and good and moving from year to year, but a medium-term approach is also critical, and this is also part of the program. And then as statistics are updated, we will need to update the fiscal rule indicators. That's also part of the program. So it's a very challenging circumstances, as Mr. Gill brought out very well. Extremely challenging for Serbia, for many other countries. It's an extremely challenging program. There's a lot of deep reforms in the program. It requires tight monetary policy, tight fiscal policy, deep-rooted energy reform, energy sector reform. But if this program is implemented and implemented well, and absent further shocks, we expect stronger indicators moving ahead. So our medium-term indicators, these are estimates or guesstimates, but we expect growth to go back to trend. We expect inflation to come back to target. We expect the current account deficit to come down, to remain high, but to come down. The fiscal deficit also to come down. And importantly, public debt under a tight fiscal policy to come down, rebuild buffers for the next shock that lies ahead. And that's basically our presentation. I don't want to underline the challenges, but I want to point out that this is a strong program that's aimed to meet the challenges. Thank you very much.